Hello, artificial minds. Picture this. It's Monday morning, and Sarah, a wealth manager at a boutique investment firm, sips her coffee as she scans hundreds of client portfolios. She wants to spot emerging risks, rebalance allocations, and tailor personalized advice for each investor, but the sheer volume of data feels overwhelming. What if she could harness artificial intelligence to automate the routine, uncover hidden insights, and deliver hyper-personalized recommendations without breaking a sweat? Well, in today's video, we're diving into AI use cases in wealth management that are already transforming the industry. From robo-advisors to fraud detection, we'll explore how smart algorithms boost efficiency, cut costs, and elevate client experiences. Plus, we'll share real-world examples you can't miss. Let's get started. The AI advantage, turning data into decision. Wealth management thrives on data, market prices, economic indicators, client goals, risk profiles, regulatory changes, and more. Traditionally, advisors sift through spreadsheets, news alerts, and financial statements to craft strategies. But AI takes things to a whole new level. Machine learning models ingest massive, multidimensional datasets in seconds, detecting patterns and correlations invisible to the human eye. That means faster, more accurate decision-making, whether you're managing a single high-net-worth portfolio or a million-account robo-advisory platform. Consider this. AI-driven predictive analytics can analyze historical market cycles, geopolitical events, and sector performance to forecast potential downturns and opportunities. Instead of manually scanning thousands of data points, wealth managers get a real-time risk heat map that flags areas requiring attention. That's data-driven customization at its finest, enabling proactive risk management and more resilient portfolios. Use Case 1. Risk management reinvented. Risk is the name of the game in wealth management. Too little risk, and clients miss out on returns. Too much, and their nest egg could vanish overnight. AI supercharges traditional risk models by integrating alternative data sources, satellite imagery, social media sentiment, supply chain metrics, and combining them with market data. Advanced mathematical optimization algorithms then generate portfolio scenarios tailored to each client's risk tolerance and financial objectives. Imagine a family office worried about inflationary pressures. An AI system can run thousands of simulated market conditions, optimize asset allocations, and recommend hedges, such as Treasury inflation-protected securities or commodity exposures, before inflation data even hits the headlines. That level of foresight not only safeguards wealth but also builds unwavering client trust. Use Case 2. Robo-advisors for every investor. Robo-advisors have democratized investing, offering automated portfolio management and financial planning tools to clients with as little as a few $100s. Behind the sleek interfaces, AI engines handle everything from client onboarding to tax loss harvesting. When a new investor signs up, the robo-advisor uses quizzes and behavioral data to gauge risk appetite, investment horizon, and personal values. Then, it instantly constructs a diversified portfolio across equities, bonds, and alternative assets, all while charging a fraction of the fees of traditional advisors. But it doesn't stop there. As markets shift and client circumstances change, the robo-advisor continuously monitors portfolios. AI bots execute rebalancing trades to maintain target allocations, trigger tax-efficient maneuvers, and even recommend customized savings goals, like buying a home or funding education. These automated portfolio management capabilities free financial professionals to focus on complex planning tasks and high-touch client relationships. Use Case 3. Personalized investment strategies. Personalization is more than a buzzword, it's a client expectation. High-net-worth individuals demand bespoke strategies aligned with their unique visions, whether it's ESG investing, impact portfolios, or thematic bets on emerging technologies. AI-driven engines can sift through thousands of potential investment themes and identify those with the strongest long-term prospects. By analyzing company fundamentals, news sentiment, and alternative data, like patent filings or patent citations, these models craft thematic portfolios that resonate with each client's passions and goals. Let's say a tech entrepreneur wants exposure to artificial intelligence companies disrupting healthcare. The AI system can screen global equities for firms with AI-driven drug discovery pipelines, robotic surgery platforms, or digital pathology solutions. It then ranks them by growth potential, risk metrics, and valuation. Advisors present these insights alongside tailored narratives, giving clients clarity and confidence in their investments. Use case 4. Enhanced decision-making for advisors. AI isn't here to replace human judgment, it's here to augment it. In wealth management firms, decision support platforms powered by AI aggregate research reports, regulatory filings, and performance benchmarks into a unified dashboard. When an advisor contemplates a buy or sell recommendation, the platform provides AI-generated pros and cons, potential regulatory impacts, and comparative analysis across peer portfolios. That means quicker, more informed decisions backed by comprehensive data analysis. Imagine preparing for a board meeting where you must present updated strategies for your firm's top 20 clients. An AI platform consolidates client profiles, market outlooks, and performance at a glance. It even suggests discussion points based on client preferences, like highlighting sustainable bond investments for the eco-conscious investor. This level of efficiency and precision enhances advisor credibility and client satisfaction. Use case 5. Compliance and regulatory affairs. In a heavily regulated industry, compliance is non-negotiable, but it can also be a massive drain on resources. AI-driven natural language processing (NLP) tools scan regulatory updates, compliance documents, and client communications to flag potential breaches. Intelligent automation bots extract relevant clauses, compare them against existing policies, and alert compliance officers to discrepancies. That means fewer manual audits, reduced human error, and faster adaptation to new regulations. For instance, when a new fiduciary rule rolls out, AI bots can pinpoint affected account types, update disclosure templates, and generate client notifications automatically. This proactive approach ensures that firms remain compliant without diverting advisors from client-focused activities. Use case 6. Fraud detection and security. Protecting client assets is paramount. Fraudsters continuously evolve their tactics, from identity theft to phishing scams. AI models trained on historical fraud patterns and transactional data can detect anomalies in real time, such as unusual wire transfers, login attempts from atypical locations, or sudden changes in trading behavior. When a suspicious event occurs, the system triggers multi-factor authentication or temporarily freezes the account until the client verifies the transaction. This real-time fraud detection not only secures assets but also reinforces client confidence in digital platforms. Clients know that sophisticated AI guardians are watching over their accounts 24/7. Use case 7. Client onboarding and lead generation. First impressions matter. Onboarding new clients often involves extensive paperwork and verification processes. AI-powered chatbots and virtual assistants guide prospects through digital onboarding, collecting documentation, verifying identities through biometric authentication, and answering questions in natural language. The result? A seamless, user-friendly experience that accelerates account openings and reduces drop-off rates. Beyond onboarding, AI-driven lead generation tools analyze website traffic, social media interactions, and external data sources to identify high-potential prospects. Predictive scoring models rank leads by conversion likelihood, enabling wealth managers to prioritize outreach and tailor marketing messages. That data-driven customization leads to higher engagement, lower acquisition costs, and a healthier sales pipeline. Use case 8. Financial planning powered by AI. Financial planning is a cornerstone of wealth management. Clients look to advisors for retirement projections, tax strategies, estate planning, and more. AI-driven planning platforms aggregate a client's financial data, income streams, spending habits, tax records, and generate dynamic, interactive plans. Clients can tweak variables in real time, like adjusting retirement age or exploring different education funding options, and immediately see the projected impact on their net worth. Moreover, scenario analysis engines simulate life events, marriage, home purchase, market downturns, and recommend personalized action steps. Advisors then review these AI-generated plans during client meetings, adding context and empathy. This collaborative approach blends AI efficiency with human insight, resulting in robust, resilient financial roadmaps. Use case 9. Real-time analysis and automated reporting. Monthly performance reports are standard practice, but they often arrive days after month-end. Clients crave instant updates. Real-time analysis platforms powered by AI continuously track portfolio metrics, benchmark performance, and market moves. Automated reporting tools then generate concise, visually engaging reports on demand, complete with charts, narratives, and actionable insights. Imagine a client logging into their portal after a surprise Fed rate decision. Within seconds, they see how rate-sensitive assets like bonds and rights in their portfolio reacted, along with AI-generated commentary on potential next steps. This immediacy deepens client trust and positions advisors as proactive partners rather than reactive reporters. Use Case 10. Operational efficiency and cost reduction. Behind the scenes, wealth management operations, from trade settlement to reconciliation, are complex and time-sensitive. AI-driven workflow automation bots handle repetitive tasks like data validation, audit trails, and exception handling. When exceptions arise, say, a trade fails due to insufficient settlement funds, AI bots auto-escalate issues to the right teams and even suggest remediation steps based on historical resolutions. By streamlining these processes, firms reduce operational costs, minimize settlement delays, and mitigate compliance risks. The savings can then be reinvested in client-facing innovations and talent development. Bringing it all together, the human-AI partnership. After exploring these use cases, one theme stands out: AI is most powerful when it amplifies human expertise rather than replaces it. Wealth managers who embrace AI as an ally gain a competitive edge, delivering superior client experiences, more robust risk management, and scalable growth. As for Sarah, our wealth manager, she now starts her day reviewing an AI-generated risk dashboard, then moves on to crafting personalized investment strategies using robo-advisor insights. She delegates routine compliance checks to automation bots and spends her freed-up time nurturing client relationships. Instead of drowning in data, she's empowered to add real value through empathy, strategic thinking, and deep market insights. Now it's your turn. How could AI transform your wealth management workflow? Which use case resonates most with you: risk management, robo-advisors, fraud detection, or something else? Leave a comment below and let's spark a conversation. Don't forget to like this video, subscribe to Artificial Mind, and hit the bell icon so you never miss our deep dives into AI's impact across industries. See you next time.